Good morning everybody, and this is your S&P 500 day trade setups for today. So we did hit the level that we were looking at yesterday, and that was right here around 39.85, and if you look to the left you can see lots of interaction around that area. Now two things on the cards really. We do have a upper trend line and it starts there and it runs across the top of everything. I just want to keep that in, and then we also have basically that kind of scenario, but I think probably better off looking at something like that, a potential start of a channel. Now you can see what's been happening the last couple of weeks. Every time we rally we fall off, we rally, we come off again. So this is kind of an interesting area, as I said yesterday. So let's just get through the levels. 3 hour, nothing much really changes, but except we had a gap up, closed up there, and now we've had this big gap to the downside right here, back in amongst structure. So let me just clean up the chart a little bit so that we can see what we're doing. And there's a lot going on in this area. So roughly in this line, that's 39.57. Have a look at the oscillators. Oscillators are, one's crossed over, one is still climbing. So that crosses over like that, then I would expect a bigger move to the downside. Now the interesting thing is we've got gaps to the upside, gaps to the downside, and we have the Fed minutes tomorrow. So I suspect we are probably going to range all over the place. So either come back and close this gap, which would make a little bit of sense, and then come back and close the top gap, or alternatively, this is just sort of Asian session trading, which nobody's going to agree with when Europe opens, and we're going to come back and test this 39.85. So at the moment, nothing really there. You can see yesterday was pretty much a big up, big down, big up, big down, big up day. The daily bar, which is something we also need to pay attention to, was a big range bar. So we've got this pin bar, we've got range bar, pin bar, range bar. There's still zero interest in buying at the moment, but there's also zero interest in selling. So this is all algorithms that are trading, and I suspect we're probably going to end up with something similar today. I wouldn't be surprised to see a tail down and then a move back up again, or alternatively just to move up, or even just a range in the area that we're in at the moment. So for today's setups, nothing really interesting at the moment. Okay, so let's just do this as logically as we can. So this is messy, guys. This is really messy. So typically for me this would be a sit on hands day. Not really interested in getting myself burnt, but this is an area here which does offer some interest. So 39.32. If you look at the oscillators now in the 15-minute, I'm not sure I'd want to be looking at a break of this, but if we do break through here during the European session, come back and test, and then we start getting pin bars, inside bars, or engulfing bars around on this level, then you're looking at something along the lines of, you probably have about 150 point stop loss for a 200 point gain. I'd be looking at the gap. So the gap is pretty interesting. You can see we tried to get there yesterday, but basically just formed a pin bar off the 155. At the moment we're still in the 155. So for as long as we're inside these moving averages, I'm set on hands. If we get above, and we can probably, let's rather just add another level in there. Really messy. So okay, there we go. So we've got a zone here to the upside, and that is 39.50 and 39.57. Now price action, especially at gaps, is pretty simple. We'll come up, we'll test this tail before the gap, and then we'll come back down. So I suspect you're probably going to have a range of 39.57 and 39.32. You're probably just going to range about in that area, potentially break up in the afternoon session to come and test this area again, or alternatively break to the downside to come and close this gap. So that's kind of the scenario that we've got at the moment. And if you look at the upper end of what potential range is going to be, which is 39.65 and 39.07, those would be the outer edges of this range. So we're in a small range now, and then I'd expect move up, move down. So that's looking at on the 15 minutes, and if you've got time, you can see how volatile this was on the 5 minute, but you probably see a bit of structure on the 5 minutes on a break of these levels. And that's kind of the view that I've got at the moment. Really, probably the best advice I can give you right now is be patient. Look how the moving averages are flattening out as well. Just be patient and wait for something to happen. Get in, get out. And then the other thing to pay attention to is the Fed's minutes. Now, the simple scenario here, the Feds have told us that they're raising interest rates, so now we're waiting for the minutes to see if what they've told us is not true. If it's true, expect another sell-off. If it's not true, then expect a bit of a buying come in. I'm not sure what's going to happen if it's exactly as what they say. That's anyone's guess. It'll probably first plummet and then climb, or so it's really the volatility is here to stay at the moment. There's nothing indicating that there's a change to the economy at the moment. I think that's the key thing here. So, war, virus, none of that is impacting the market at the moment. Supply chain worries are definitely, but apart from that, it's economic data coming out of the USA and Europe right now that is driving the market. So anyway, that's kind of my view at the moment. I'm very cautiously sitting on my hands. If we do see an opportunity on the 15 minutes and we're watching the charts, there's definitely an opportunity to get in either way, long or short, but it's going to be scalps. So get in, get out. Don't try and hold it for any major breaks, because I don't see those breaks happening just yet. Okay, anyway, that's kind of my view at the moment. Hope it helps, and we will catch up with you tomorrow morning. Cheers for now.